I know you just talked about you trying to pay off, I mean, going through the journey of student loans, and then that took you on this whole journey. But how have you gotten from where you were to where you are now, and just like learning more and more and more? What was some of the books that you learned or you read, and some of the things that you've picked up along the journey of just like starting with negative net worth? Because that number is always shocking. Like, you're like, yeah, I'm good, I have a job, everything is wonderful. And then somebody tells you about like, oh, go do a budget and do a network statement. And then you're like, I'm broke. It's just like this shocking thing that hits everybody's mind. So how have you been able to progress from where you started to where you are now?
Yeah, for sure. And I don't want to come across as some like multimillionaire or anything. I'm still only 4 or 5 years into this thing, but it's just sort of been a gradual process of learning. Like, I find that I can, if I find stuff that I'm interested in, I tend to get quite obsessed with it, to be honest. So I think investing kind of turned into one of those things. So it's just reading, like, pretty much every minute that I'm in the car. If I'm traveling anywhere, I'm listening to investing podcasts. And it's just constantly trying to get all of these different bits of information into my brain. And then you obviously get a lot of different perspectives from different people with investing as well. So it's sort of like trying to put all of these competing ideas into your head, and slowly you sort of develop an investing philosophy that kind of fits with your own. So for me, that's been like a value investing approach. So trying to think of stocks as real businesses, which they are. You know, we're doing this call and I'm on an HP laptop, which is a public company. I've got a Logitech webcam, which is a public company. I've got Sony headphones, which is a public company. You know, all of these are real businesses that sell real products, which have a value based on how much cash they can produce. And, you know, if you can go out and buy businesses, maybe when they're having some sort of short-term problems, or people just don't really appreciate the true value of that company, you can get some pretty good deals. And you get this weird balance, which a lot of sort of academic style investors, I suppose, wouldn't even acknowledge that it exists. But you get this weird balance of not necessarily high risk, high return, or low risk, low return. You're trying to get low risk and high return, which is like this, you know, asymmetric downside upside. So that's basically what you get when you can try to understand the true value of a business. And I often say that, you know, if you can buy $1 for 50 cents, that's kind of what I'm trying to do with my investing. Protects you from downside, and then you got this nice kicker in terms of upside as well. So I might have gone off on a bit of a tangent there with your initial question, but that's kind of how I'm thinking about it. This is
good. Yeah, I mean, first of all, I'm just glad I'm not the only person who just looks at the world and I'm just like, yeah, so that's HP. That's an Apple. So that's AAPL. Yeah. That's a company I can invest in. Like, I'm just glad I'm not the only one who walks around and only sees, I don't just see like products. I also see like the companies, and I'm like, how could we invest in this? Like I was in, this was a funny story that I heard from somebody. They were like, oh, they went shopping at Walmart and they had invested in Walmart. And so now, because they had understood the idea of like when you invest in a business, you become a owner kind of that business. And that was the whole idea. And so they went into Walmart one day and they just picked up stuff off the shelf and they were walking out of the store. And so people were like, wait, you haven't paid for that. And he was like, what do you mean? I own
this place.
And so that story is just like, that's literally how I always tell people, like, when you invest, you're not just investing in numbers on a screen. There is an actual business underlying it. Nowadays, it's extremely hard to get that idea across to anyone because of just how gamified we seem to have made the stock market into. So one of the things is I like to view you as like, when I go watch your channels, I go to you as like one of my reason setters, as like, because I can tend to, because I'm still new in the whole game. And so I get very excited about almost everything. It's like, oh my gosh, this is going to blow up. And then for some reason, you just bring out a video where it's like margin of safety or this. And I'm just like, man, just party pooper. It's like, now I gotta come back to reasoning. I gotta like, okay, fine. Let me actually do what I'm supposed to do. So, and you talked about it a little bit earlier of just how you went through the mindset of value investing. And I see you as one of like the true value investor, but like, what is it about, you spoke about it a little bit, but I wanted you to go a little bit more in depth into it of what is it about value investing that is just so appealing? What is it about the Monish Bobrides, the Warren Buffetts, the Charlie Mungers? And by the way, guys, these, which I've mentioned them to everybody before, but these are some of the legendary greatest investors of all time. I see them as like, if we had a Mount Rushmore, these guys would be on that list. So the Peter Lynch's, all of these guys, what is it that about these guys that just made you like, they make more sense than the academics that we hear about on TV, or we see on CNBC, or we see on all these other outlets that are always screaming about something that just made you like, I just like these guys a little bit more.
Yeah, it's funny you say that, because I get the same. It's funny you say that about coming to watch my videos and being a party pooper. I feel a little bit like that sometimes when I watch like the Warren Buffett annual meetings. I've heard Monish Pabrai describe it as you're sort of like a car. How's he describe it? He sort of describes going to Omaha to the Berkshire Hathaway annual meeting and listening to Warren Buffett as kind of like wiping all the gunk off the windscreen, and you can suddenly see clearly again of how to go about investing. So I occasionally do feel like a bit of a grumpy old man with my videos. I hope it doesn't come across like that.
It doesn't come across like that. It's just basically we listen and we're like, he's making a lot of sense. I don't like that he's making a lot of sense. I want him to just agree with me of what I'm thinking right now. But it's like, it's one of those things where it's like when somebody tells you, oh yeah, don't put your hand next to the fire because you might get burned. But it's like, but I want to put my hand next to the fire just to know what it feels like. And he's like, don't do it. Like, but it's just like, we all just want to jump. We're like moths to a flame because we see the market and we're like, I want to join that race. But you're like, hey man, be careful. And then you like calm us back down and we turn around with our shoulders shrugged and we just like go to a safer option. But we still like, we're still every once in a while look over and then we come back and watch your video again just to remind ourselves, because it's so easy in this day and age to forget, to just be like, I want to join that thing. I want to get on that race. And it's like, no, relax. And so that's where what role you play, at least in my mind, of just like watching your videos. Yeah,
for sure. I guess, I think the reason that I sort of have adopted the strategy, like, I think it is Buffett again. I keep going back to him because I have very few original ideas and I just learn everything from him. So,
that's why you're here. I'm trying to steal more ideas from you. So it's all good.
Yeah, there you go. I mean, Warren Buffett talks about value investing almost as like an inoculation, and you either get it immediately or you don't. And to me, like, it is something that just clicked with me. Like, it was obvious to me that, if we're buying ownership in a business, then the return you get and the amount of risk you're taking is directly related to the price that you pay for that business. If you put things in like a rental property context, which I always like to do because I think a lot of people can relate to that. If you're investing in a rental property that after all your expenses is going to bring in, say, $10,000 a year, just as an example. There's no way a rational human being would go and pay $1 billion for that rental property because the cash flows just nowhere near justify the income, right? But when bubbles and a lot of frothy stuff tends to happen in stock markets, that's exactly what people do. Sometimes they'll be bringing in negative $10,000 and they'll pay $1 billion for it. Things can just get crazy from time to time. So I think it just makes sense. That's why it was appealing to me. Like, it seemed like the right way to go about it. I think for me, I see the stock market as a vehicle for long-term wealth creation. So for me to be comfortable putting a very high percentage of my net worth into the stock market, I don't want to be just speculating and gambling on what stock prices are going to do over the next several years and maybe do okay, but maybe lose a bunch of money. That's not a position I want to put myself in. So if I can understand, what's the downside, what's the upside with any given business, and do the work to understand that company and try to, like you say, put a estimate of intrinsic value on it, which is its own kind of can of worms. That's not a precise calculation necessarily, but it's just a methodology that made sense and allowed me to be comfortable putting a lot of money into stocks over the long term.
Yeah. I think it's the, what is that quote by Monish Pabrai? You want to flip heads or tails, and you want heads, you win, tails, you don't lose a lot. I stole that quote from you basically. And when you said that quote, I was just like, it makes sense. Like, it just makes, like you said earlier, it's like, why would I take this much more risk when I understand that if I do this instead, I will get a substantially better return. And also I'm also limiting my down factor as well, which leads me to a different question. You used the example of real estate and rental properties. One question I always ask everyone
I hope you enjoyed that little snippet of the Rambling Mind podcast. If you want more of the Rambling Mind podcast, or if you want to listen to the whole episode that you just heard, go check it out on any podcast listening platform, whether that be Anchor, Spotify, Google Podcast, Apple Podcast, Breaker, Stitcher. I could go on, but you guys already know which podcast you love to use to listen to. So go check it out. Link down in the description as well. I'm gonna catch y'all later. Peace.